Good afternoon, everybody. My name is Hala Abu Ali, and on behalf of the Economic Research Forum, I'm very pleased to welcome you to today's important webinar held in collaboration with the World Bank Chief Economist Office for the MENA region. We are gathered to discuss actually the April 2025 MENA Economic updates, which carries quite a timely and provocative theme entitled Shifting Gears, the Private Sector as an Engine for Growth in the Middle East and North Africa. This topic could not be more critical, as the report highlights the region continues to face considerable macroeconomic headwinds ranging from global uncertainties and declining oil revenues to climate-related shocks and to other structural weaknesses of many economies in the region. And the private sector remained under-leveraged, I would say, and despite its potential to drive productivity, employment, and inclusive growth. Today, we will hear from the authors of the report, followed by reflections from two distinguished ERF affiliates and fellows as commentators. And then we will be opening the floor for broader exchange from the participants if we will have a short Q&A session. So we are honored actually today to have the team from the World Bank joining us to give us a presentation on this insightful report. We have Dr. Roberta Gatti, the Chief Economist for the Middle East and North Africa region at the World Bank. Dr. Gatti is a leading global economist whose research and policy work spans labor markets, human capital, and inclusive growth, who will be offering introductory remarks, followed by Dr. Jessica Torres, senior economist at the World Bank, MENA Chief Economist Office also, where she leads the macroeconomic monitoring and analytical work across the region, and will walk us through the key macroeconomic trends, followed by Dr. Asif Islam, who is the senior economist at the World Bank and the lead author of the report thematic chapter. His work in general focuses on private sector development, entrepreneurship, and regulatory environment in MENA and beyond. Dr. Asif Islam will present the thematic chapter, which takes a deep dive into the private sector, its constraints, opportunities, and the institutional reforms needed to unlock its full potential. Without further ado, I would love to give the floor to Dr. Roberta Gatti to give her introductory remark. Roberta, the floor is yours.
Thank you, Dr. Hala, for the kind introduction, and my thanks go particularly to ERF and Dr. Shireen for always providing an opportunity for us as a community of researchers and thinkers around the economic questions that surround the MENA region for discussion. We present the MENA Economic Update, which has as you know, has two parts. The first part, which is the sort of short-term macroeconomic outlook, and the second part is a spotlight chapter, traditionally here at the ERF. And we came in October with the MENA Economic Update, which was titled Growth in the Middle East and North Africa. And so when we looked at growth, we actually found probably to no one's surprise, that the region suffers from a chronic low growth syndrome, which over the decades has resulted in being very far away from the frontier economy. So we are on average at about 19% of consumption per capita of the frontier economy. And a lot of this gap would need to be bridged by productivity. So the private sector is an important engine of productivity growth and is an important engine also of job creation. And this is what we will talk about in the spotlight analysis of the April 2025 MENA Economic Update, which will be presented by my colleagues Asif and Jessica. I don't want to spoil the surprise of some of the findings that you will hear from them, but you will hear a lot about uncertainty, and you will hear a lot about potential of the private sector. Again, they will delve into the details, but let me just wear for a moment the hat of a researcher and make just one point here. It's a bit difficult to be a researcher in MENA because it's very difficult to access data, because data are not produced as much as they should. They are not made accessible as much as it's needed, not only for researchers to study, but for governments to make good decisions. I think that we as co-authors of this report have been very honest about the limitation that we faced in our research, but I would like to use this opportunity to really bring us together as a community of thinkers in sort of trying to move the frontier of good data production and free access for researchers and good use for policymakers. I'll conclude on this and happy to then come back together on the discussion when the time comes. So maybe I'll just turn directly to Asif for the presentation. And thank you again for giving us this opportunity.
Can everyone see my screen?
Yes.
Okay, I'm going to go to presentation mode. Does it look good? Perfect. Thank you, Roberta. So my name is Asif Islam. I'm a senior economist at the MENA Chief Economist Office of the World Bank. And together with my colleague, Jessica Torres, I'll be presenting the findings of the April 2025 MENA Economic Update titled Shifting Gears, the Private Sector as an Engine of Growth in the Middle East and North Africa. So first, a big thank you to the team for all their hard work in getting this report done. A big thank you to Roberta for her guidance throughout. And also a big thank you to Shala Rosden, our new deputy, who helped us through the process. Now, if I were to boil down this report into just three messages, what would they be? One, the macroeconomic outlook is shrouded in considerable uncertainty. Two, the region has low standards of living compared to the frontier, and a dynamic private sector is essential to close this gap. A brighter future for the MENA private sector is possible if governments rethink how they engage with markets and also businesses effectively harness talent. I'll now hand it over to my colleague Jessica to present the macroeconomic outlook.
Thank you, Asif. So first, as we all know, the macroeconomic outlook is characterized by a sharp increase in uncertainty. And here in particular, we're talking of economic policy uncertainty. In the left panel in this slide, we show an index of policy uncertainty, which is computed by tracking mentions in the news of words related to uncertainty. And we see a sharp increase over the last few months. In the right panel, we separate this index and we see that uncertainty has increased across all categories of economic policy. But when we look at specifically trade policy uncertainty, the increase is by a factor of 60 since September of 2024, an increase that has no precedent. Next slide, please. oil markets reacted, and what we observed was a sharp decrease in prices again over the last few months. In this figure, in the black line, we present the spot price of Brent crude, and what we would like to highlight is the sharp decrease of more than $10 in one single week in April of this year. We are also presenting implied prices based on futures contracts. And we present just two dates, January of 2025 in the blue line, and then April of 2025 in the red line. And this is just as examples of the rapidly changing landscape in this market, which of course has important implications for the outlook of the MENA region. Next slide, please. In terms of the forecast for economic activity, what our country economists are projecting is a modest pickup in the average forecast, but from a low base and with significant revisions relative to the last edition of the MENA Economic Update. In 2023 and 2024, average growth in the region was 1.9%, relatively stable. And for 2025, the uptick is of 2.6%, but the downgrade since we last came to this forum is of more than 1 percentage point relative to what we had before. Next slide, please. Thank you. Among oil exporters, the uptick is explained by the rollback of oil production cuts, which of course will have an impact on oil exports. But this is also the group where we observe the largest downgrades. And among developing oil exporters in particular, this is explained by idiosyncratic factors in the case of Iran. Among developing oil importers, there are multiple factors that are explaining the significant uptick, but we would like to highlight in the case of Egypt, the rebound in consumption as inflation has continued to ease and monetary policy has loosened. And in Morocco and Tunisia, what is explaining the uptick is the rebound in the agricultural sector. But of course, next slide. Thank you. Climate shocks present risks to this forecast, and there is looming in this context the spike in trade policy uncertainty, which will have different impacts and presents different risks to this projection of uptick in economic activity. First, a decrease in demand from trading partners will impact oil and manufacturing exports. Of course, oil takes the lion's share of exports in the MENA region, but there are countries such as Morocco, Jordan, Tunisia, Bahrain, and the United Arab Emirates that are integrated in manufacturing global markets. In countries where exports are concentrated in a few products or a few destination markets, risks from decreased demand, I'm sorry, I have windows popping up, will be larger as they will have a harder time navigating sector-specific shocks. There are other channels of impact. If oil prices continue to decrease, this may build pressures on the fiscal accounts of oil exporters. And while this may represent an improvement in terms of trade among oil importers, there is a prospect of lower remittances flowing into these countries from the GCC. Disruption to global value chains may result in a buildup of inflationary pressures if this results in higher import prices. And of course, uncertainty may also negatively affect investor sentiment and may also result in slower capital inflows into oil importers, which combined with other effects may add pressures to the value of currencies in these economies. Next slide. There is a second source of uncertainty in the MENA region, and that is due to the continued fragility. While over the last few months, there have been positive developments in some countries such as Syria and Lebanon, prospects remain precarious. In the Palestinian territories, the outlook remains extremely uncertain. And when we think of the spillovers from this conflict into other regions, by the time we closed this report, the projected uptick in the Suez Canal had not yet materialized. In addition, there has been a lamentable loss of life and human suffering, which numbers cannot capture. When we have looked at the long-term effects of conflict, in particular on economic measures, the results are sobering. Economists in the team looked at different conflict episodes over the last 20 years, and what they find is that GDP per capita is 45% lower than what it would have been in a situation without conflict. And this amounts to about 35 years of economic progress, economic development in the region. So this is a sobering reverse of development. I'm going to pause here to pass it on to Asif, who is going to walk us through the findings of our deep dive analysis into the private sector. Thank you.
Thank you, Jessica. So we know that the region, has experienced conflict, and that's intertwined with a history of sluggish economic growth. So over here in this chart, you see that the region performs worse than income peers when it looks at GDP per capita from 2000. And we have also seen from our analysis from the previous report that income per capita is about 25% of the frontier. We know that low productivity accounts between a third and a half of this gap, and the dynamic private sector is essential to close it. So the question is, what is the state of the private sector? So to get a sense of the state of the private sector, we need a database that has broad coverage of the region, and that is the World Bank Enterprise Surveys. These surveys cover essentially formal private sector firms with 5 or more employees in the manufacturing and service sectors. And they have various limitations, so they basically will not cover informal firms, not micro firms, and not fully state-owned firms. And most of the variables you see looking at growth rates are based on recall data. So what do we see from the enterprise survey data? We see that sales per worker growth, a proxy for labor productivity growth, is lower in MENA than income peers. We also see few firms invest in physical capital than income peers, and few firms provide formal training compared to income peers. Now, this data does not have a perfect, measure of job creation, but you can proxy for that by looking at annual employment growth, and even that is lower than income peers. Now, you see the same story sort of unfold with innovation. You see that essentially fewer firms spend in R&D spending in the MENA region compared to income peers. Few introduce new products, few introduce new processes compared to income peers. Now, so far, this data of the World Bank Enterprise Surveys are a snapshot in time. There's some with coverage over time, but there's a huge lag. So one thing we want to highlight in this report is the importance of administrative data, especially when you can do detailed studies with higher frequency and look at productivity decomposition and so forth. We have two illustrations in this report. We have Morocco and Tunisia. In Morocco, what we do is we decompose the aggregate labor productivity growth into the within effect and the between effect. So the within effect would be on average how productive farms are, and the between effect is whether the more productive farms are getting a larger share of the market. Now you can see from the results, essentially the within component has been positive. That means on average farms are getting more productive, but it's not the most productive farms getting a larger share of the market as shown by the negative between component. In Tunisia, we see sort of the opposite story. We see that the between component is positive. That means the more productive farms are getting a larger share of the market, but the within component, is negative. That means on average, farms not getting more productive. And this might tie into a literature on political connections that we have seen. So the more politically connected firms are the ones that are more productive in Tunisia. And they're also the ones that have access to more resources and they have a larger share of the market. However, this tends to affect farms on average, and so they have lower productivity. With this data, you can also look at job creation, and you look at it in higher frequency, as we show in the complete right-hand panel. We see the job creation rate for Tunisia that has been on the downward trend since 2000. But this is just, a small illustration of what you could do with this sort of detailed data. We have seen, using the Tunisia data, studies on the effects of political connections, the effects of tax exemptions, the effects of startup programs, and so forth. So this data is quite valuable and informative. Now, the World Bank Enterprise Service covers the formal private sector. The administrative data also covers the the formal sector. What about the informal sector? We know that it's large and unproductive. You see that informal employment is about 40 to 80% and contributes only to about 10 to 30% of output. And one gap we have is the share of firms that are informal. This is difficult to estimate. We don't have data. You could say it's between 50 to 80%. For about two countries, we do have some detailed survey data on informal firms, and this is Egypt and Iraq. And not surprising, informal firms tend to be less productive than formal firms. However, we see that for a segment of these informal firms, they are similar in profile to the more productive formal firms, the formal counterparts. And this indicates there's some degree of heterogeneity, and this needs to be potentially taken into account by policymakers. Now, one thing we want to highlight is the challenge we have in gathering census and administrative data to do analysis, especially firm dynamics. Went through, Google Scholar, a lot of journals, a lot of World Bank reports, and we came up with essentially 5 MENA economists that have published studies on firm dynamics. And we looked into it in more detail. It was essentially 2 that have complete firm dynamics within and between effects using administrative data. Now, we want to make sure we were right, so we did something far more systematic. We looked at a database of 11 million research papers. We used machine learning techniques. We identified about 835 papers on MENA countries that mentioned firms, and it confirmed what we knew, that essentially 5 MENA economists have published studies on firm dynamics. The rest of the studies are mostly based on non-representative samples like stock market listings and so forth. So we lack this data, and it's quite crucial for us. Now, I've given you a sense of the state of the private sector, but the lack of dynamism in the private sector does make it vulnerable to external shocks. And over here, we talk about 2 shocks in particular. One is conflict, and the other is natural disasters and extreme weather events. We know the conflict has gone up in the MENA region. We also know that natural disasters and extreme weather events are of higher frequency and cost more than the rest of the world. So what we tried to figure out is, what does the literature say in terms of the effects of conflict on firms and extreme weather events on firms? When it comes to conflict, we have a global study that uses the World Bank Enterprise Service to look at these effects. And the first order effects are not surprising. Conflict destroys firms, they exit the markets. However, what we see with surviving firms is interesting. We see that essentially when conflict hits, they lose access to inputs, and this lowers their revenues. However, they try and adapt. They try and adapt in terms of labor costs by lowering those costs, and this results in no effect in their profits. However, this is not true for every case. In situations where you have poor governance, profits are affected and they are lowered. In situations where conflict is onset for the very first time, profits are also affected and they are low. There are also 2 detailed high-quality studies based on survey data on the region. One is on Libya, and the findings are essentially that conflict, yes, it results in a decline in revenues. However, the effect of conflict declines with increasing conflict intensity, and this is because surviving firms get a larger share of the market as they face fewer competitors. We also have a study in West Bank and Gaza, and we see, not surprisingly, that the value of output of firms due to conflict goes down. However, this is largely due to access to foreign inputs that explains about 70% of the drop in value. Now, when it comes to extreme weather events and firms, what we did was we looked at, the World Bank Enterprise surveys. We had 7 MENA economies with 2 rounds of data. We looked at the geolocation of these firms and connected to satellite data on precipitation. We took the long run average of the precipitation for a particular location, and they looked at 1 standard deviation above, which is a positive precipitation shock, proxy for a flood, and 1 standard deviation below, which is negative precipitation shock, which is proxy for a drought. And what we found was that essentially consistent with the literature, most of the effects play out through the droughts, which is the negative precipitation shocks. So what we find is that droughts hurt firm performance. Negative precipitation shocks essentially reduce firm performance for the average firm. This is sales by 40%. We also see firms are less likely to invest, but then about 9% less likely to invest. We also see that sales per worker is affected negatively. Now, what's interesting is when we try to unpack the effect on sales per worker, we saw that there was no effect on employment, but there's an effect in terms of the composition of employment as it shifted more towards temporary workers. Now, there could be effects playing out through the health of these workers, and we have seen this in the literature, but unfortunately in the World Bank Enterprise Survey, we don't have this information. We also see that some of the channels, how these effects play out. We see that access to finance goes down. Firms have low access to loans. They have also less likely to have financing to banks. And this could be because of a deterioration in the balance sheets or because banks are less likely to lend in an uncertain environment. We also see a degradation of infrastructure in terms of water outages and power outages going up, which hurts firm performance. And we see also an interesting channel through governance. We see that firms that are affected by these droughts are more likely to spend time dealing with government regulations and are also more likely to expect bribes. And we don't have a perfect explanation for this, but one explanation could be that essentially under these situations, governments might try to extract more from firms. Now, looking at the 2019 wave of the enterprise survey, there was a special green module, and it allowed us to look at some additional things. And probably one positive message was that the negative precipitation shocks we see are positively correlated with certain adaptation behaviors, such as better management of water use, more climate-friendly energy generation on site, and also upgrades of machinery and equipment. So, I've discussed the state of the private sector. I have showed the vulnerability to external shocks. So now the question is, what can we do about it? And over here, we essentially have 2 perspectives. One is actually what governments can do about it and what firms can do themselves. Well, so when it comes to governments, we think about how they engage with markets. And there are a number of ways. One, in some of our countries, they are a large employer. So they may be taking talent away from the private sector. We also know that state-owned enterprises account by some estimates for 20 to 50% of the share and value added. We also know that these SOEs play a dominant role in sectors that are typically served by the private sector in other economies. And you see this in the graph on the right-hand side, the black dots are sectors. And the further these black dots are from the 45-degree line, it means a higher share of MENA countries have at least one SOE in that sector compared to high-income countries with having one SOE in that subsector. So you see a lot of these sectors are above the 45-degree line, which means a high prevalence of SOEs compared to high-income countries. So what can governments think about doing in this situation? Well, they could, it's good to provide a clear rationale for state ownership. It's good to separate the roles of shareholder, policymaker, and regulator. And also it's important to promote competition. And this is essentially the competitive neutrality that ensures that SOEs and private sector firms compete on equal footing. We know that state-owned enterprises do get a lot of benefits in the MENA economies. Another way that governments interact with the markets is through the business environment. We see that a large share of firms in the MENA countries complain more than income peers about perceived corruption, political instability, and business permits and licensing. And these are areas that the governments could think about, improving the business environment. Now, finally, one other way that governments intervene in markets is through industrial policy. And so for this section of the report, we try to do 3 things. 1, try to get a sense what is industrial policy. 2 is to see what is the prevalence of industrial policy and in MENA. And 3, see, well, how would you get it right? When it comes to the definition, there is no consensus, but it typically involves, intervention of the government directly through a range of policies, from tax exemptions to trade restrictions, with the aim of correcting a market failure and furthering policy to structurally improve the business sector. Now, when it comes to the prevalence of industrial policy, we know from certain databases like the Global Trade Alert data that the mentions of industrial policy globally has increased considerably since the 90s in the business press. It has been about, I think, 20-fold of an increase. Now, what we also find in our analysis is this sort of database sort of undercounts the extent of industrial policy carried out in MENA economies, and this could be because of how MENA countries carry out industrial policy. Now, in terms of getting it right, this is not easy, right? You have to first be able to identify and address the right market failure. You need to then implement it credibly, and then you need to evaluate on course correct. This means you have to have an idea of how your stakeholders are affected, including firms, households, and individuals. And this means having more data and having better statistical capacity. Now, conducting industrial policy can also be challenging in particular environments. If you have a highly distorted environment, you could have unintended consequences. So think about a situation where you're conducting industrial policy to promote more jobs, get better job creation, while on the other hand, you have energy subsidies that tends to favor physical capital. Industrial policy is also very hard to do in a highly uncertain and unpredictable environment. And one message we have in this report is that industrial policy is no substitute for good macro fundamentals and a good business environment. So what can businesses do? Well, one important aspect is to improve their management practices. We knew that management practices is positively correlated with better firm performance, more product innovation, process innovation, and R&D spending. Studies out there have showed that the difference in TFP between the US and other economies is explained by management practices by about 20% to a third. So it is important, and it's one way that the business sector, private sector can improve. The other way we talk about in the report is that there's a lot of untapped talent in the region, especially when it comes to women, and the private sector could leverage this. We know that female labor force participation is about 19% in the MENA region, far below the global average. And we know from our previous report that equalizing the female labor force to the male labor force participation rate could increase GDP per capita for the typical MENA economy by 51%. Now, what we find is, just like the rest of the world, in MENA, firms that are run by women tend to hire more women workers. So over here, what we see is that the percent of female workers in firms managed by women is almost twice as high as those run by men. However, the challenge we have is when we look at the share of firms with female top managers, it's far low in our region compared to income peers. Even in Saudi Arabia, that's seen a rise in female labor force participation. Only about 3% of firms have a female top manager. Now, there are a number of ways you could improve the share of female top managers. You can invest in education. You could promote more competition that could push back against forces of discrimination. But we've also seen in the literature a positive correlation between having more equal laws and the share of firms with female top managers. So over here, we have the index from the Women, Business, and the Law. And what you essentially see is an index of how equal the laws are, with higher scores being more equal laws. And you can see that MENA considerably underperforms other regions, although there have been substantial reforms of late. On the right-hand panel, you see that it's only Morocco that does better than income peers, and the other countries with high scores in the region are Saudi Arabia, the UAE, and Djibouti. So to summarize, our report and the presentation, what we say is, the macroeconomic outlook is shrouded in considerable uncertainty, the long-run structural challenges that have held back standards of living in MENA. And the MENA private sector is important here to play a role in improving productivity. However, we know the MENA private sector is not dynamic, and to address this, governments could rethink how they engage in markets through SOE reform, improving the business environment, rethinking and being careful about industrial policy, and also improving data transparency. And when it comes to firms, they could harness talent at the intensive margin with better management practices, and an intensive margin by attracting more women entrepreneurs and managers. I'll stop here. Thank you for your time.
Thank you very much, Asif and Jessica for this insightful presentation. And now I would like to turn to our commentators for their reflection. First, I'm pleased to welcome Dr. Marie Kawar, a distinguished development economist and former Minister of Planning and International Cooperation in Jordan. She has led groundbreaking work on labor markets, social protection, and inclusive growth, both in government and in international organization. Dr. Marie, if you can unmute yourself, and you have 7 minutes to give us your insights on this very interesting presentation. Thank you.
Okay, good afternoon, everybody. It's a pleasure to participate in this webinar and in this a very important analysis. Thank you for the presentation and good to see colleagues. So this is a comprehensive and timely report that actually combines robust data, in-depth analytics, and a clear policy recommendation to guide decision-making. There are several things that I particularly liked, which is the analysis of state of the private sector and the deep dive into firm dynamics, and the recommendations that we are always functioning in the absence of data that makes it very difficult to formulate policy. And keeping this constraint in mind, I feel that the report has pushed the evidence-based analysis and recommendations to their justified limits with this challenge. And this is a big plus, and congratulations to the author. Another thing I like is the emphasis on the private sector that is examined not through just abstract references to competition, but through the concept of industrial policy and the concept of contestability. And in this respect, the effect of state-owned enterprises and state patronage is very relevant to the region, and it's high time that we address it. And that the conclusion of the report and the role of government and how to get the industrial policy right, this discussion about nuancing the industrial policy in itself is timely and quite relevant to the region. Now, I do think I cannot add much to this report. So what I will do in the next few minutes that I have is put on the policymaker hat and think of, as a policymaker, what is it that I want to see? And that is the first thing I will look for, is what is unique to my country and what I can do about it. Let me start with a few very small examples. The report, for example, cites the case of Egypt as, in terms of the informal economy, has been the driver of job growth, and that this has globally been the case for 20 years. So this is, I think, the issue of the informal economy is not specific to the Arab region. It is global. We know that it absorbs workers who couldn't afford to stay unemployed, and they stay in kind of low working condition where they cannot negotiate. But this is a global issue. Another issue that I would like to just pinpoint is the share of the public sector, that it is high in the region. Okay, but the evidence shows that half of the MENA countries are above the global average and half are below. And basically, this is the global average, that half are above and high below. So it would be good to nuance how to differentiate between global trends and the trends that are specific to our region. Now, more broadly, and as a policymaker, I would be very much interested to know about industrial policy, research and development, productivity indicators, and these are really well reflected in the reports. I think the report got it just right. So I will not add much here, except to say that it is worrying to see that countries, including Egypt, Lebanon, Morocco, Tunisia, have seen R&D activity decline significantly, and that just 22% of firms in the Arab region, for which we have data, invest in physical capital. And that is just below the 37% average of lower middle income countries and 50% average of higher income countries. So these are the worrying aspects that the report revealed. Also, the report shows labor productivity growth has been alarmingly limited. And this is across all Arab countries, regardless of their income levels. This is with GCC countries. It has also, I think it says it's almost negative or stagnant. Middle income countries, slightly better, and also the fragile country for obvious reasons. Of course, the report mentions the structural issues, such as informality and etc. But I guess this is something that any government should focus on. Now, allow me to focus on 3 issues that are of particular interest to me. One is the issue of conflict, peace, and recovery. The second, gender, and the third, data and statistics. Usually, discussion of the private sector and economic outlooks do not contextualize enough the issue of conflict and stability. And I am so glad to see that this report does contextualize it and actually focuses at the firm level analysis within these countries. Because in the past, there has been a tendency in economic analysis to discuss economic issues, growth, etc., the lack of private sector, the dynamism, the slow growth, etc., but then without a dedicated analysis of crisis. Then we have a lot of a body of research that discusses crisis and recovery countries. So this report in particular has combined it and combined it very well. To give you an example, for example, human development in Gaza has regressed by 70 years, according to a UNDP report. And we know more than that, the regional impact the Gaza crisis has on countries like Jordan and Egypt in terms of tourism and in terms of trade. So it is a regional issues, being we cannot look at Gaza alone or Yemen alone or Sudan alone. This affects everybody. And I will use this also, the issue and the impact of crisis on how it affects social stability and human security for all the region. In a recent Arab Barometer report survey confirms that most citizens across the region continue to hold a negative view of their country's economic prospects. And in 8 surveyed countries, most respondents think that the situation is either bad and very bad. In Lebanon, this is as much as 98%, and in Tunisia, this is as high as 89%. So it reflects the persistent concerns of citizens. And this is not just about inflation, unemployment, and poverty. It's the absence of political stability and security. Consequently, of course, we have immigration that remains high, and it remains high among the young and the highly educated. So here we are. We want a more dynamic private sector with higher productivity and innovation, while we are in a region that, if we exclude the GCC, remains insecure economically or politically, and where we have young people who should be leading into the future, feeling unsafe and no belief in their own countries. Now, let me move to the issue of gender. The report rightly stresses that we need to make private sector a true engine of growth by increasing women's participation, and that this can only improve GDP in any countries, and that women are an untapped opportunity. So a few things here. I found it very interesting that the region's upper middle income countries scored lower in the Women in Business and Law Index, if I'm right. And I actually don't know how to interpret this. I mean, we need to think that the higher income, the more equality and the more participation, but the Arab region, when it comes to gender, is always not in line of expectations, especially if we look at the high education of women and low economic participation. Now, the institutional and legal restriction play a role until eventually they don't play a role, you know? So by this, I mean, we should certainly continue to work towards removing all impediments in the public and private life of women. But I do believe that the outcomes will show it's a long haul. The outcomes will show in generation. It will not be immediately. We know what is needed in terms of laws, social protection, family-friendly policies, and safety at work and in public, etc. The agenda is quite long in terms of how we should be supporting gender and women's economic empowerment. But I do believe there's a parallel level that we should always think about, and that is the economy. How do we improve the economy, and how do we improve governance in general? I mean, the high unemployment of women is parallel with high unemployment of young men and high unemployment of men in general. So I do believe overall economic improvements affects women as well. The last point, and I will be closing, is the issue of statistics. Talking of regional average is really tricky, especially when there's no central tendency in the region, you know? We cannot talk about an average between Qatar and Yemen. And calculating a regional MENA average by country population or country's GDP remains in a way meaningless. You know, the average, for example, the average between Egypt and Djibouti will be Egypt. So I personally prefer to calculate regional average as country average. I know this will always be a struggle for reports like this, but I think this is how we can really show the performance and progress in different countries. And I know that the report tried very hard to look at country examples.
Thank you so much.
So I will conclude and say that the agenda ahead is huge, and so are the ambitions. And thank you so much for an excellent report. That, but also we do need better data, especially administrative data. Thank you so much.
Thank you very much, Dr. Kawar. And next we are joined by Dr. Tariq Youssef, the Director of the Middle East Council on Global Affairs and a prominent policy advisor and economist. He has held leadership roles at Brookings and the Dubai School of Government and has written extensively on political economy and economic reforms in the Arab world. Dr. Tariq, the floor is yours. 7 minutes. Please, so I don't need to stop you. Thank you.
Thank you, Hala. And first of all, thanks to Roberta and her team, Asif and Jessica, for really producing an excellent report. I add my voice to Mary Kawar. As I always do, we hardly disagree on things, in saying that this was a well put together report that I think advances our knowledge about a lot of issues that matter for the region, matter not just in explaining why we are where we are, but in also thinking about the future. And in the interest of time and ceding more of it to the audience, I will just perhaps emphasize a couple of points that are worth keeping in mind. I mean, one of the big messages coming out of this report, and it should not be a surprise to any of us who follow economics, is that the levels of uncertainty and unpredictability and volatility in the region a year ago, on account of a lot of regional specific vulnerabilities. And here, I think the World Bank has done a commendable job of emphasizing the role of conflicts in driving uncertainty and driving volatility. So just 8 months ago, it was the regional vulnerabilities, especially conflict, that were pretty much driving a lot of the uncertainty and the concerns by policymakers. This report further puts at the top of the issues the emerging global uncertainty, a new development that perhaps was not foreseen to the extent that it was. And so moving forward as we think about all issues in the region, especially if we put ourselves in the shoes of policymakers, we have multiple sources of potential macroeconomic and development uncertainty facing countries in the region. The global, think of trade policy, and think of what comes after trade policy, because there will be issues that have to do with monetary policy and debt and exchange rate pressures. And you've got the regional specific vulnerabilities that have a lot to do with conflicts and bilateral tensions. And it's this mix that I worry is going to be driving the policy agenda and will make it very hard moving forward, including for our colleagues at the World Bank, to think about the prospects in a way that connects these pieces together. And maybe I'll say something about that in just a minute. So that is the first message you get from the report. And I think it's one that we who follow economics and follow the prospects of this region ought to accept as one of the factors that will be conditioning a lot of what we do, what we research, what we talk about. And the report does a good job of highlighting that a lot of the effects, these shocks, these global shocks and these regional shocks, tend to have a persistent negative effect, especially over an extended period of time. So these are not one-off things, typically. Then there is the structural agenda, which I think the report very cleverly dives into and brings back the private sector, a concern that's been with us for quite some time. I have to go back decades, in fact, to kind of recall how these discussions emerged. But as Mary suggested, the report and the work goes much further than what we have seen before. You learn a lot about the obstacles to private sector development, the composition, the structure, the behavior of firms. I think this firm level data has kind of opened up a window for discovering and discussing and analyzing issues in new ways that we didn't do enough of before. I'm actually quite surprised that we didn't do more of this. So these two come, this agenda of thinking about the private sector as an engine amidst all this uncertainty, all this volatility, and a very poor, sluggish growth record that has been with us for decades now, and has become part and parcel of how the region thinks of itself and how we've learned to expect outcomes in the region. I think then these two come together towards the end as the report addresses the policy-making community. You've got this uncertainty, these regional vulnerabilities. You've got a very clear structural change, structural reform agenda focused on the private sector. And now this is how you sort of begin to think about what you do next as a country. I do echo Mary's or underline Mary's suggestion that while we talk about the region, we have to also now accept that we're actually discussing multiple regions within this larger Middle East region. It's become really difficult to lump in the Gulf countries, for example, with the Levant or with countries in North Africa. Economic dynamics are different, governance trajectories are different. The outlook, the confidence, trust vis-a-vis the policymaker, the business climate. And then you've got within the Levant and other parts of the region, these conflict countries, which, if you accept the proposition that conflict has become one of the big conditioning factors for outcomes, then thinking about these conflict countries in very different ways, in very original ways. So how do policymakers deal with this global uncertainty and the structural agenda around private sector development and customize it for the specific circumstances, I think is where we're moving logically as an outcome of this report's discussion, analysis. And I think the report does a good job of emphasizing some important areas of concern or areas of interest, including, for example, making industrial policy a core aspect of how you deal with these issues. And I think the report was fair to the multiplicity of views on industrial policy. I think perhaps what we also, as we think about industrial policy moving forward, we see aspects of it in the Gulf that are going to be very different from what we see elsewhere in the region. So when I think of industrial policy in the Gulf, I think of EVs, I think of AI, I think of the Green Revolution. That's not necessarily what countries in Levant or parts of North Africa are to be thinking about. Perhaps their own form of industrial policy is thinking about private sector development in ways that are original, that are creative, that play to some of the strengths they have and some of the identifiable problems. Again, taking into account also some of the caveats that were expressed. So what I like about this report in sum is that the macro picture sort of lays the constraints, so to speak, facing the region moving forward, partly because most of the shocks are really external to countries. And then you've got this long-standing agenda that could become an engine for a response. Although moving forward, we have to also think about how does the private sector in the region respond to the dislocation in trade policy around the world? What happens to economic and trading links, especially as supply chains become realigned, reconfigured? How does the private sector in our region respond to that? How does governments do that through, innovations in industrial policy that deal with the external shocks, but address those long-standing issues and drive the right development outcomes? In sum, and I apologize, I thought I would be taking less than 7 minutes. I think this report lays really an agenda for thinking about development in the region moving forward, thinking about economic outcomes, and for thinking about the big headlines of uncertainty, unpredictability, and external shocks as the region responds to them over the next few months and next few years. Thank you.
Thank you very much, Tariq, and many thanks for both commentators, actually, for the rich observation. And I would like to invite Dr. Torres and Dr. Islam to briefly respond to the key points raised if they want. Yeah. And I see that there are some questions in the Q&A, but Dr. Islam has kindly responded to some. So please, Dr. Islam, the floor is yours. Or Dr. Torres.
Can you hear me?
Yes, yes.
Yes. So there were some interesting questions and very good points raised on the measurements of informality, which largely go with the ILO definitions, and also about what we mean when we say management practices. And over here, we look at the Nick Bloom measures that are well identified in our enterprise surveys. And this involves, how firms react to processes breaking down, how they monitor performance, how they give bonuses, do they have production targets. So those sorts of things do come into play. Yes, and I don't know if any of my colleagues want to come in for the other questions.
I can. So there were a couple of questions from Saeed Abbas Ahmed. Thank you very much. And they are more into how we are defining dynamism. In the report, we follow the literature. We look at rates of job creation, job destruction, where the data allows, and we do see a downward trend in this measure of dynamism. And then the second way, which we also try to compute, is with decomposing trends in measures of aggregate productivity. And because of data limitations, all we could do was proxy productivity with sales per worker. And the idea is to separate trends and try to understand which firms are the ones that are driving this. Is it entering firms? Is it exiting firms? Is it because the average firm is becoming more or less productive? Or is it because how resources are being reallocated within the private sector? And so here, these are very well-established measures and in the literature. And so that's what we try to do. The second question was more a comment on how it is hard to claim whether the informal sector is productive or unproductive because of measurement issues. And indeed, we agree. And there is plenty of evidence in the literature of how some informal firms may be more productive than some formal firms. And what we tried to do was document evidence. What we tried to do in the report is document evidence where the data allowed, which was in the case of Egypt and Iran. So thank you, Syed, for these questions. I don't know, Roberta, if you want to jump in. Yes, go ahead.
Thank you, Asif and Jessica, and especially thank you, Dr. Mary and Dr. Tariq, for your thoughtful comments, which will keep us churning for a while. And I wanted to take an opportunity to maybe react to some of the high-level points that you made. You both talked about there being multiple regions within the MENA regions, and the heterogeneity of countries that we face is both a challenge as researchers, but also something that keeps us very interested. You highlighted that, there are countries, oil importing countries, and somebody in the chat room asked, what do you think about the austerity policy of having to raise more revenues in countries like Egypt, where we would need to push more primary surpluses to deal with the debt? I wouldn't mind taking that on the side and have and answer that. But you talked about conflict, and you talked about AI happening in the Gulf. I think that there's a lot of heterogeneity, and what we try to do in the report is to avoid using MENA averages, but really benchmarking at least countries by their level of GDP per capita. We find that that's a fairer way to sort of look at them. However, in this heterogeneity, I really wanted to highlight one commonality, and the commonality is the limited presence of data, limited access to data, and limited use of data for policy decisions. This is the case for fragile countries, maybe by necessity, because it's very difficult to collect good data when there's a war going on. This is happening in oil importing countries, middle-income countries that could be compared with a country like Mexico, where data are available to researchers with one click and one download, and countries like the GCCs that are investing in such frontier activities such as AI and data centers, but where data for researchers about simple labor force surveys and so on tend not to be available. So this commonality actually speaks to something that probably is a deeper, sort of more ingrained political economy of the region. And I think that having Dr. Mary and Dr. Tariq was the right group of people here to talk about this. Let me conclude with a quick answer to the question that I saw in the chat room about, what do you think about these austerity policies? I think that Egypt had that growing in a very unique way. The professor points at, do we need to have higher primary surplus? Actually, Egypt was a country that had both GDP growth and positive and a primary surplus, and yet the debt was growing. So what we found in Egypt is, from indirect analysis, that a lot of this debt growth was coming from statistical and financial flows residuals. Usually these are sort of statistical numbers or below the line items. And so we found that the below the line items, elements that are not included in the fiscal accounts, accounted for a large share of that growth. So if I were to say, what's the policy? Well, two. One of them is sort of bring what is below the line, bring it within the line, so that as a policymaker, you really have a clear understanding of what pushes the debt in your economy. So I managed to conclude even on austerity with data, and I will never tire by saying that I think our region has a tremendous potential, which we see in the economy, which we see in the people, but it's also important to sort of measure it, because you only manage what you measure. So thank you so much for this opportunity to discuss with you and to have this interesting exchange. And over to you, Dr. Hala.
Thank you very much, Roberta. Usually data is my heartwarming always discussion, and I have to commend actually the effort that has been done with the World Bank and through the ERF with the WAMD and other initiatives. And I really invite you to continue actually this effort in collaboration with the ERF in the future. And really, as we heard today, that unlocking the potentials of the private sector in the MENA region requires more than incremental reforms, and it calls for bold action to reshape the role of the state, foster competition, and create an enabling environment for the private sector-led growth. And on behalf of the ERF, I would like to thank our speakers, our lead commentator, and all the participants for an insightful and engaging discussion. And the perspective really shared today, I guess, provide valuable directions for both policy and researchers to be moving forward, as you correctly mentioned, Roberta. And finally, to those observing Eid Mubarak, may the occasion bring peace, joy, and meaningful moments to the region and all your beloved ones. Thank you once again, and we look forward to welcoming you to future ERF events. Thank you so much.
Thank you, everyone. Eid Mubarak.
Thank you, everyone.
Thank you.
Eid Mubarak.
Thank you.
Thank you.
Bye.